Hello, seniors. Today we're talking about a subject that doesn't come up very often, but is a key part of the discussion about financial aid, and that is loans. Many of you will be offered loans as part of your financial aid package, and we want to make sure that you're equipped with the knowledge to make the most informed choices about what kinds of loans, if any, are best for you and your family. By the end of today's webinar, you'll be able to evaluate how loans could play into your plans to pay for college. So here's our agenda for today. First, we want to acknowledge that the topic of loans can be scary, and there's a lot of media outlets talking about how there's a debt crisis in America. We'll discuss some of the risks of loans. We'll go over some important terms to know. Have you ask yourself, how much can you afford? I'll leave you with some important questions to think about. After your mentor group debrief, you'll complete your college readiness action items. Before we get into how loans can play a role in your college financing plan, we want to acknowledge that there is a national crisis around student debt. The rising cost of education, coupled with decreased financial aid, has made more students than ever reliant on loans to finance their education. You can see some of these headlines and you might start thinking about loans, and you might start worrying and thinking there's going to be no end, this will never be worth it. And in fact, debt and repayment are genuine challenges to think about when planning how to pay for college. And unfortunately, students of color are the most impacted by this. So our goal today is to equip you with some tools and guiding principles to consider as you review your financial aid offers and make plans for how to pay for your concrete next step. So what are the risks of loans? Well, the biggest risk is failing to repay them. That can have a negative impact on credit score for the rest of your life. And there are some factors that can make it more challenging to repay your loans. The first is taking years to graduate, and that could be because of changing majors, for example, or from taking time off. Another risk factor is not completing your program. So once you sign the paperwork, you are responsible for paying back that loan, regardless of whether you finish your degree. Finally, it's easy to get into a buy now, pay later mentality. You might never have had access to this much money in your life, but unlike grants and scholarships, it's not free money. There will be a time when you have to be responsible for repayment, and the time is not as far away as it might seem. So you must consider the sticker price of the loan, which means the loan plus the interest, and think about a long-term repayment plan.
We do want to remember that loans are a kind of financial aid. Let's remind ourselves of the four main types. A subsidized loan is where the government pays the interest while you're in college. Unsubsidized, the interest accrues immediately when you start taking out. A Parent Plus loan is taken out by your parent. And a private loan is from a private institution, something like Sallie Mae, rather than other loans which are from the government. We do want to remember all these loans must be repaid. There are different fees we're going to go over today, different interest rates. We're going to talk about what does it mean to accrue interest. We'll talk about different repayment options, and we'll talk about opportunities for deferment and forgiveness. Deferment meaning you pay it later, and forgiveness meaning the government pays it for you. A big principle we want to just keep in mind today is that sometimes these terms can be confusing. You will want to remember to reach out to your financial aid office if you have any questions along the way, and as you consider loans as part of your plan to pay for your concrete next step. So the first question you might have in mind is, how much can I even afford? You want to know in advance when you will enter repayment. So that means paying back the loan. As you're signing up for your loans and completing your required counseling, you will get information about when you will need to start repaying. Be sure to mark these dates in your calendar, on your phone, somewhere where you'll remember them. This is really the time to lean into the core characteristic of responsibility so that you budget accordingly and make your payments on time. There may be options to defer or change the timeline of your loan payments, so be sure to research those or contact your loan provider if you're interested in those options. Loans can also have impacts on your future finances, dealing with your career, your income, or even personal purchases like a car, a house. The question of how much you can afford all really depends on your personal budget. We all have some basic expenses in the adult world: housing, food, transportation. You will need to factor how your loans play into that and what kind of lifestyle you want to lead. This will ultimately depend on the type of job and salary you get when you enter into your repayments. Once you're in college, you can always connect with your college's career center or financial aid office for support in navigating personal finance. You also want to know about temporary reducing or eliminating monthly repayment amounts. For federal loans, those are the ones from the government, there are ways to sign up for what's called a sliding scale payment that adjusts the amount you pay monthly based on your income. This could be helpful, especially when you're entering the workforce and you may have more of an entry-level salary, a beginning salary. You will need to contact your loan provider for how to sign up here. The government could also even sometimes forgive the amount or even reduce how much you have to pay back for public service careers like teachers, physicians, attorneys, AmeriCorps members. Sometimes these programs are attached to a certain number of years of service to the public or other requirements, but going into one of these fields is a great way to save money if you're considering one of them. The big takeaway here is that you can plan ahead for how much you think you can afford. What we're going to do now is check out a student loan repayment calculator and think through what budgeting for these loans might look like. So let's check this out. This is a tool you can use as you consider loans in the future. After researching Summit alumni and looking at long-term financial well-being, something we want to set you up for, our recommendation is that you take out no more than $30,000 in loans for college. And this calculator shows us why. In this tool, you can first enter the principal amount of the loan, i.e. how much you're borrowing. And then we're going to estimate a monthly payment over 10 years, which is a typical amount for how long it takes to pay back loans, which is 120 months. Then we're going to enter a simple interest rate of 3.73%, which is the current interest rate for undergraduate subsidized and unsubsidized federal loans. Now, please note, the interest rate is currently paused due to COVID-19, but it may be reinstated by the time you get to college, so we want to familiarize ourselves with it. When we enter in this info, you can see here that the monthly repayment will be $299.90, about $300. The minimum salary required to manage that payment is estimated around $45,000. So we're recommending this $30,000 borrowing amount benchmark because the national average entry salary for a college graduate is $55,000, making this a reasonable amount for you to afford on a monthly basis. As you consider how loans could function in your plan to pay for college, you can use this calculator to help you make informed decisions. And now that we've looked at some specific numbers, we're going to zoom out a little bit and think about some principles to consider when you think about minimizing your own loan burdens if you choose that as part of your payment plan. First, never borrow more than you need. No one likes to owe extra money at the end of the day. Make sure you're keeping in mind the cost of attendance at your college and our recommendation of no more than $30,000 in loans over the course of your degree. For a 4-year pathway, so you know, that's a max of $7,500 in loans per year. Make sure you're budgeting carefully because the cost of attendance can be reduced. As you consider your cost of attendance, remember, some of these indirect costs are in your control. For example, consider your housing plan. Can you save money by living at home rather than on campus? If you do live on campus, could you choose a more affordable housing or meal plan to cut costs? Or even when buying books, you could consider choosing used books over brand new. Saving costs in these areas can also decrease the amount of loans you need to borrow from the get-go. Work is also another way to earn money rather than borrowing loans. The summer before college is a great opportunity to save some money with a summer job. We also want you to be mindful how much you work during the school year if you choose to do so. With college comes a higher demand in the workload, a new level of responsibility, and a huge transition. Be sure not to overcommit yourself in an effort to save money. Specifically, we suggest that more than 15 hours per week is not recommended for a full-time college student. Ultimately, it's up to you to find the balance between a job and school that works for you. Lastly, loan burden can be at its greatest when we consider other avenues like private loans or credit card debt. Private loans come from institutions other than the government. You may have heard of places like Sallie Mae, for example. Private loans come at even higher interest rates than government loans, so you end up paying back even more. Also, credit card debt can build up to real challenges later in life when you want to try to buy a car, purchase a home. Our recommendation here is to avoid private loans and credit card debt as much as you can in deciding your concrete next step. So these are the questions we really empower you to have on your mind as you consider how to pay for college. First, is your free aid, that's scholarships and grants, also sometimes known as gift aid, if it's not enough, how much is reasonable to borrow? Remember, our recommendation is to borrow no more than $30,000 over the course of your degree, but in reality, that number might still be too high for your financial situation. This may require a tough conversation with your family to determine what the right reasonable amount is for you. How much interest will be added to my loans? Remember, ultimately, you will have to pay back some interest on your loans, and this does accrue over time. As we discussed, government loans will always have lower interest rates than private loans. So we're recommending to look at subsidized first, then unsubsidized. You always want to choose the subsidized if it's offered to you. What's the initial cost of not graduating on time? Dr. Massey said this earlier. So, across the country, college completion is actually tracked over 6 years rather than 4, even though we think of a bachelor's degree than a 4-year degree, or as a 4-year degree. This means that many students are having to take out even more loans as they spend additional years completing their course of study. You have already shown at Summit that you can self-direct and keep on pace on your projects and content assessments. Continuing to use those skills in college will help limit your ultimate loan payments. Also, be sure to reflect on your future and what you want for it. How easy will it be to find a job in my field? What will my entry-level wages be? What will my student loan payment be? In terms of thinking about your future career, right now, today, you can log into Overgrad and learn more about average salary of different careers and college programs across the country that lead to careers. When you're in college, you can also consult campus resources like career centers and advising centers that can help you get connected to the right job for you. Today, we even reviewed the loan calculator, as well as another tool to help you think about the future as you plan how your future repayments can fit into your personal budget. The biggest reflection question at the end of the day is, how much will I be able to afford? The answer to this question will be different based on everyone's individual needs and budget. Be sure to talk with those who support you financially about these questions as you weigh your decision for your concrete next step. Today, we've talked about a ton of information about a particularly tough subject when it comes to college, loans. I know that for myself in my college journey, finances were really at the top of my decision-making list. It might be for you, it might be a different priority. We do want to keep all of these ideas in mind as you think about your concrete next step. Here are 3 takeaways we want you to take away from today. First, make informed decisions. Take time to crunch the numbers, talk with your family, and reflect on the best plan for affording your concrete next step. Second, be proactive. Do research, connect with your financial aid office and loan provider directly. Getting answers to your questions will only help you make the best choices in the end. Last, you're not alone. We're here to help. This process can be pretty confusing and intimidating. Your mentors, school faculty, and our team are here to have your back. We're so proud of everything you've accomplished in the application process so far, and we're excited to see you transition to your next steps after you graduate. Continue connecting with the team around you, and let us know how we can support you along the way. Let's pause here. You now have 10 minutes to debrief with your mentor group. What did you hear? Why is this work important? What did this make you think about? And what questions do you have? Pause the video for 10 minutes to discuss, and when you're ready, press play. So now that we've had time to discuss, let's think about how this plays into your own plan for paying for college. Our action items today is to complete this task card. You may have seen it before from our previous webinar. This task card really helps you break down your financial aid offers and choose what's the right plan for you. We encourage you to really pay attention to what loans are offered and even use the repayment calculator we looked at today to help you determine the best plan moving forward. Second, talk with your family about paying for college. Like we said earlier, there may be some tough conversations needed along the way to determine the best plan for you. Really ask your family, what can we afford to take out? And if taking out loans is not an option, what might be the best plan for you in terms of a CNS? You'll want to continue to check your college portals for action steps and required documents, financial aid verification. Remember, you may not be able to take out loans until your financial aid process is complete, so you want to make sure that's up to date. You'll want to update your application status in Overgrad. Make sure you're changing from will apply to applied and applied to your admissions decisions as you receive them, and then continue to apply to scholarships. This is free money. We all like that. We've talked about loans today as one part of the financial aid process. Go ahead and zoom to step number 1. Open the tinyURL and start comparing your financial aid offers and see what's the best plan for you.